Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 18th of November, 2019, about 4:20 in the afternoon, Central Time. Another all-time high day, what can I say? But a Monday up could lead to a Tuesday decline. I was listening to financial TV today, and I think it was CNBC where they were talking about the day, and they were saying that recently the lows have been made in the first few minutes, then the market seems to rally. And I'm talking after we get to about 8:30 in the morning Eastern time when the stock market, well, it's 9:30 that time, 8:30 Central time. And it's when the stock market opens. I haven't paid attention to that, but I'd watch tomorrow. Tuesdays you often get these bit of a reversal. The dollar down today. We have tomorrow night the British debate between Mr. Corbyn and Mr. Johnson to see what's going on. John Bercow will be one of the commentators. That should be more than interesting on Sky News. As you can see, grains mixed bag today and energy's a bit lower. So as we come over and we look at the S&P, what can you say other than the market's at all-time high weekly closes, hasn't had a break since back here in September, and just keeps moving and chugging along. That's not a surprise to me. As I pointed out, we had a head, a shoulder. If you look at it right through here, another one. Actually, you could do that and that. And if you flipped it over, I gave you some price counts last week. I'm not going to review that again, but that often is the case when you get into these breakouts. Now, if you got under 30.75, that would break the pattern that began right here as we started making those higher lows, higher highs. No magic to that. When I look at where the market's at, the 18-day average of closes is tonight. In other words, after 5 p.m., likely to get up to or exceed that 30.75, is it's gaining about 6 points a day, so that would put it right in that general area. That's what I'll be looking to see. So a pullback there, that could be a support zone early on if the market were to break, but I'm also not telling you that you're going to get suddenly a 50-point drop in the market. What I am looking for is resistance at the upper Bollinger Band, and that number tonight should climb. The way the math works, it's probably going to jump on you. As you could see, it's been moving up about 6-7 points a day as well. I wouldn't expect that to stop based on today's performance. The slow stochastic is the key. As long as it's embedded, which means both the red and the blue lines are staying over 80, I'm friendly the market. Get the red line under 80, and I think you'll get a correction of a reasonable proportion that could carry to that 18-day average. You haven't reached that. In the NASDAQ, it's the same thing. I have the embedded reading. I have the same pattern of higher lows, higher highs. The trend is up, looking for the market to possibly challenge that upper Bollinger Band. Does it from time to time, then seems to drag to some sideways action. In the Dow, embedded reading, 28,134 is the resistance point. The market still has higher lows, higher highs, but this is an area where I think some traders are going to take some money off the table and look to come in on the breaks again. Remember, I still think that we have an early strong November, and I've written about this in my twice daily research, often leads after that first week to about another 4% gain by year end, and I'm giving an average as to what it's done. I think fact set that. They were doing the commentary on it, and I picked up on that. The Russell, to me, is still the weak leader here. In other words, I said that wrong. It's still the weakling of the market. It's got the pattern of lower highs, lower lows. Momentum has been correcting. It lost its embedded reading all the way back here, but is a sign of strength. Notice it hasn't gotten down to that 18-day average since that occurred, and that's a fair amount of time ago, over a week ago. So when the break comes, even if it were larger than normal, it's exhausting, or in other words, using that energy to get down there. So wherever this Bollinger Band comes in, with that combination of the 18-day average is what I'll be looking at in some manner. In the cash VIX, notice how you're stuck at the 18-day average of closes. The market has just got volatility collapsing on you. Whenever volatility collapses, the Bollinger Bands come in like that, and that's what they're doing right now. Down at the 1193 area, I'll say it again, it wouldn't surprise me if the pros write puts at the first challenge of the Bollinger Band, looking for a minimum back to the 18-day average of closes. in the T-bond market, an outside day up. So here we have a market with higher lows, now higher highs. The short-term trend is turned up. In the market sights could be the 100-day average with support at the 18. You break this pattern in the market if you take out today's lows. So the number that I think the bulls want to defend is today's lows, and they're hoping to catch the shorts right in here, drive the market a bit higher. And we have seen in the 10-year notes, the real rates go from about 193, 194 down to the 180 area. So we're seeing the correction here as well. Support's back at the 129.07 area. Take out that 18-day average, take out today's low, and you put into play the possibility of prices going back to the 128.04 area if it's done between tomorrow and Wednesday. Barring that, the 100-day average at 129.23 is in play. TLT is the same type of game. You've got the higher lows, higher highs in this market. You don't want to see 137.43 taken out. 139.18 is in the market sights. In the dollar index, you finally fell back after losing this embedded area to the 18 and the 100-day average. Now, the goal is the 18 when that happens, and you went right there, and the market's holding. You've stepped out of the uptrend. The market's in an overbought condition and in a support area temporarily. The euro's the flip-flop of it. The market was embedded, lost the embedded reading on Friday, didn't give you much of a chance unless you jumped in then because it's moved right up to that neutral zone of that 18-day average, which is where I expect markets to go, either the 18 or the 100-day when they lose that embedded reading. Again, this is all in my charting course. In the British pound, we're pushing on the upper Bollinger Band. You're getting into an area here going into the debate, do you want to go into that? Right now, it's certainly looking as though Mr. Johnson is pulling way ahead in the polls, and the question is, will he keep that after tomorrow? He still favors the Brexit, remember that. Japanese yen, the market is neutral. You've got prices closing, well, let's see, today's close is 92.08, the 18-day average 92.12. So the bias is down, the swing line is up, and the battleground's the 18-day average. I don't see this market doing a heck of a lot yet. Momentum pretty flat in the market. Bitcoin breaking down again, $300. The trend remains lower highs, lower lows. Now you're oversold. Will you hit the lower Bollinger Bands? The question. My guess is the pros won't want to see today's highs taken out, and at the lower band, wouldn't surprise me if you get some short covering. Brent versus WTI back to a neutral stance against the red line, the 18-day average of closes. The market tried to rally, failed 2 days now at the upper Bollinger Band, pulling back. If it takes out 61.70, you break this uptrend that you've had in place, and that would give you just a higher high, lower low, no trend in the market. Same in WTI. You don't want to see 56.53 taken out. The trend is up, and I'd be watching this momentum. It's right now both numbers over 80, both over 80 the day before, but not the day before. So you're in an overbought situation. We'll see if it starts coming down tomorrow as it guesses what the API number will be for the afternoon. Gasoline had a pretty good sized break, and when I'm looking at this, if you look at this day, which is Friday, you had a big up day. You had an outside day up. You took out that low today. Often, I wish I could use the word always, I won't. Often that means the closest of a key moving average or the Bollinger Band comes into play until you take out the highs of Friday, and that's 158.08. So I'm looking for a failure here. And in that gas, warmer weather, what did I tell you? You had that one spurt up in the winter weather that we had. Now the weather forecasts are milder, and away you're going to the downside. I want to remind you that I offer my research, especially if you've never tried it. I'd like to give you a free trial to it. It includes twice daily written updates. It includes oral commentary at night. It includes my morning subscriber video where you get to see, and I put this up ideally before 6 a.m. every morning so that you get a feel for what I'm thinking about the market for that coming day, both short-term and long-term. I'll be writing commentary, specific trade recommendations, a whole package. You might find it interesting. If you use window envelopes, which to me is a profit-taking tool that's very underestimated, And it's only a profit tool. It's, in other words, not meant for anything except coming out of positions, be it short or long. It's not a stop out point or anything like that. Well, I write about that, I talk about it regularly, and I cover it in great detail. The question is, can you get a profit? Give us a call, 866-973-2077. We'll put you on the trial. You can go to our website, sign up for it there. When you go to the website, you'll see free trial offerings. Just click that on or click here. It'll take you right there. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.